So Capitec, of course, is now a full retail bank. As Wayne mentioned, it came to the market in 2001, 2002. It was listed at R2 a share. It was brought by the guys, Yanni Mouton, Chris Otto, Michiel Leroux, guys that had been within the PSG group. It has grown now to an extremely credible player with 6 million plus customers. That's direct retail depositors. It still makes a lot of money from smaller loans. And we'll have a look and see what kind of quality business they've been rising in there. The substantial asset book, though, they're now in the first division, you'd have to say. Price to earnings ratio 22.14, dividend yield 1.77%, and a market capitalization of 63 billion rand. Enormous performance.
Yes, yeah. And they've done extremely well. Now, it's interesting to study Capitec because I think either investors or just people who are interested can learn a lot from this.
Yeah.
They came into a market where no one would touch it with a barge pole,
yeah,
but they've fulfilled a need. They grew in the unsecured market, in the small loan market, but then I suppose 7 years ago, 6 years ago, they decided we're going to move up the income scale and become more of a transactional banking, get people with higher salaries, not just micro lending based.
Yep.
And they started opening up in all the malls. I mean, 5 years ago, there wasn't a Capitec bank in any mall.
Yep.
Now they're in virtually every mall, and I think they think they're going to get a 1,000 branches in the next year or so.
Wow.
So they are everywhere now.
Quickly.
And when you study the average income of the average client, it's doubled in the, over the past couple of years.
Because obviously the kind of people that have salaries that get paid every month and that use credit cards and other savings products and investments and so on, that's a higher income client. Yeah. And they're attracted by Capitec's slightly higher rates of interest paid on deposits, as well as their long office hours, their good technology, apparently, and their swift application process, all the stuff.
Look, it's quite clear why you and I would go to a Capitec. Very cheap. I wouldn't say a basic offering, quite a sophisticated offering, but it's cheap. If you want to feel special, then you mustn't go to Capitec. If you want a private banker to phone you and say, come and have a cup of coffee and a cup of tea with me, if you want your private banker to go and fetch your foreign exchange for you, don't go to Capitec. But you get that from the other banks in their wealth divisions, for want of a better word. But of course you pay for it. Whereas with Capitec, you can just online pay all your payments, do all your transactions done.
Wayne, while we've been talking, look at that share price.
It's unbelievable.
So why does it go up so much in 2014, 2015? Is that because African Bank is falling down?
That's part of the story, but as I said earlier on, it's an interesting study, this. The price-earnings ratio before that price hike was massive. And everyone was saying, oh, no, the share's expensive, watch out for the share. Yet it was matched by earnings. So in other words, this is a case where the market was correct in the pricing of the share because earnings went through the roof. And now their last set of results were extremely good.
I was going to say, I mean, people expected it to be bad because you hear all this talk about consumers under pressure and so on and so forth. Dividend massively increased, earnings solidly up.
So, I mean, even at the current price-earnings ratio, it doesn't look particularly expensive. Of course, we all know how capitalism works. Everyone is eyeing out their business model. Everyone sees the successes they are making. So competition will increase dramatically. And of course, all the big banks are in this field now as well. The whole lot are in this field.
The big 4 or 5 banks are moving into this market in the way that they're redesigning their marketing strategies to try and target upwardly mobile people, offer them new and interesting products. So there's no guarantee, but at the same time, you do get the feeling that internally it's a very good organization. They've got a great internal culture. They have that thing where they take their new branch managers to Stellenbosch and have an induction, and everybody loves working there.
No, look, they've got the right corporate culture. I must say, I mean, I don't go to malls often, but whenever I go to malls around about payday, you don't want to go to a Capitec branch. The queues go out the door.
Well, that's a good sign.
It's a good and a bad sign.
And then, of course, they're working longer hours. They're available and open on Saturdays and Sundays. People love that sort of stuff. Okay, good. So as far as the stock price is concerned, I mean, it had a bit of a wobble. There were a lot of people that said African Bank, what would the contagion spread to them? But it's still moving well. I mean, the price to earnings ratio sort of normalized, as you said, because of the earnings growth.
Used to be 14, now 20.
Hot or not?
Hot.
Hot. Excellent. Like to hear it. Me too. Hot. Good.